Hi everyone, my name is James. Welcome to Self-Made Finance, where we teach you to be your own finance manager. In a layman's language, we give you the basic financial management skills that you need to take hold of your finances. Today we're talking about multiple streams of income. You know, if you look at what is happening right now in the world, it's very dangerous for you to be living on only one source of income. But the question is, what are the various income sources available for you to take advantage of? In this video, I'm going to share with you 7 streams of income that can help you to build wealth. You don't want to miss this. Welcome back to Self-Made Finance, where we teach you to be your own finance manager. If you're new here, don't forget to subscribe to the channel, like the video, and hit the notification bell so that anytime we drop a video, you can have it. So let's go straight to it. The first source of income is earned income. And this is the kind of income that you earn by working as a staff or employee of a company. This is your usual 8 to 5 job where you work and you are paid at the end of the period based on the arrangement that you have with the employer. It could be monthly, it could be daily, it could be weekly. The good thing about this source of income is that it doesn't require an initial capital for you to start. All you need is your skill and your ability to convince the employer that you have the ability to do the job that is in question. The only problem with this is that there's a limitation as to how much you can earn. You know, so irrespective of what you do, there's a limitation as to how much you can earn. And that's the only problem with this one. So all you need to do is to make sure that you don't rely solely on this source of income. You do other things to complement that. Having said that, I don't agree with those who make it look as if it's a sin to be working for salary. It still remains a very good source of income that you can base on that to get the other sources of income. Because mind you, I said that it doesn't require any minimum capital or initial capital. Your skill is what is needed. So it remains a very good source of income. The second source of income is business income. And as the name suggests, this is a source of income that you earn by operating a business. That is owning your own business. It could be providing a service, or it could be producing a product just that solve a societal need. So you can look around you, what's the need around that you can solve. So if you're able to get a solution to some of these things, you're definitely going to be patronized and you can earn money from that. The good thing about this is that there is no limit as to how much you can earn. How much you put in is actually what you get. So your ability to ensure that you run your company well, your ability to ensure that you employ the right people is what determines how much you can earn. So that is the good thing about running a business on your own. The other side is that there's that risk that you take alone. So if the company goes down, you also go down, but it remains a very good source of income. Billionaires are made from running businesses, so you're not alone. You can start this and make some money from that. The next source of income is interest income, and this is the kind of income that you earn from your investment. So it could be investment into treasury bills, it could be investment into fixed deposit, it could be government bonds or corporate bonds, it could be high earning savings account that is giving you some income. The good thing is that it is a passive source of income. And what it means is that you don't get involved as to the processes that produce the income. You just put your money there and wait to receive that. The bad side is that the return is very low because the risk is also low. You don't get involved, just put the money there and then you wait for that. And so definitely it is okay for the return to be low. That is the only bad side of that. But then it is a very good source of income. You know, if you're somebody that is afraid of taking risks, this is a very good source of income for you. Rental income is a fourth income stream, whether it's you purchase an asset or a property with a sole purpose of renting it out for some cash. So you maintain ownership of the property, but allow people to use it or occupy it at a cost or at a fee. This is usually seen in the real estate industry. So it could be a land, it could be a house, it could be a flat or apartment, or it could be an office space. So you allow people to use it and you charge them something on that. Apart from these areas, it could be any other thing that people need for their life. Now we live in a world where weddings and engagements are a commonplace now. So you could take advantage of that, get things that people require for some of these things. It could be chairs, it could be tables, it could be canopies that people require for these, and then you rent them out at a cost or at a fee. and you make some money from that. So rental income is a very good source of income. The downside is that it requires a very heavy initial outlay. So you need a lot of money to be able to purchase those assets. But once you are able to overcome that, it is a very good source of income for you. The next on the list is dividend income. And with this source of income, you get it only when you invest on the stock market. So invest in a company with the sole aim of growing with the company. When the company is profitable and they pay dividend, you earn your income. If the company doesn't pay, you don't earn it. So that is how it works. So you invest in a company on the stock market, you wait for the company to grow. If things go well with the company, at the end of the year, if the company wants to pay dividend, you get one because you are also a part of the company by investing in that company. The downside, like I said, is that if the company is not profitable and it's not able to pay dividend, you go home with nothing. Nevertheless, it remains a very good source of income. The question here is, if you're somebody whose sole aim is to earn dividend, then you need to do your background check. It's not every company that pays dividend at the end of the period. So you need to do your research to show that the company you are invested in is a company that pays dividend every day. There are companies that has declared officially that every year they'll pay dividend. For some of them too, even though they have not declared that, they pay that every year. So you need to do your check and be sure that the company you are invested in is known for paying dividend. The sixth income source is capital gain. And this is the kind of income that you get by purchasing an asset, waiting for some time and selling it at a profit. So you purchase an asset at a lower price, you wait for some time, you study the market and sell it for something on that. This happens usually on the stock market where investors buy a stock that is undervalued, wait for some time. When the value goes up, you sell it and make some money. This can also happen in the real estate market, so you could purchase a land, you could purchase a building, wait for some time. When the value goes up, you sell it and make some money from it. Apart from these two areas, it could be anything at all, anything that has value. You buy it, you wait for some time, and then you sell it to make some money. But then the question here is that you need to ensure that you are very aware that the value is going to go up at a point in time, because if the value doesn't go up, you are going to lose when you sell it. So please, you need to be sure that the assets you are purchasing will go up at a later time so that you can make some money from that. If you don't do that and you just go for that, you are going to lose. That's a risk involved. The final income source is royalties and licenses. This is the kind of income that you earn by coming up with a product, a process, or an idea, and you take steps to make it your property so that anybody that uses it pays you something. Let me give you an example. When I started doing this YouTube project, my first video was a promo video. So I had a background music, I uploaded it on YouTube, and YouTube flagged that music and said that that music belonged to somebody. So if I continue using it, any money I earn on YouTube will go to that person. That is somebody's way of making money. So I had to go back and change it, get an engineer to do a new music for me for my project. So if you are somebody that is so good at bringing something up, coming up something that is very nice, very genuine, just take the steps to make it your property so that anybody that uses it can give you something. This is a very cool way of making money. Thank you for watching this episode of Self-Made Finance. Keep watching and we'll bring you very wonderful episodes going forward. In the meantime, don't forget to subscribe to the channel, like the video there, drop a comment there, and let's grow this channel together. God bless you.